The second thrust of the resilience budget is to help businesses overcome the immediate challenges. The resilience budget will address the 3 C's on the minds of every business owner now: cash flow, cost, and credit. The first C is cash flow. For businesses, cash is king, and many have called for more timely assistance. As some have told me in Mandarin, 远水救不了近火, or distant water cannot put out a nearby fire. We're doing our best to flow the payouts under the wage support schemes quickly. By the end of this month, more than $600 million would have been disbursed to employers under the former wage credit scheme parameters. By the end of May, a total of $5.6 billion would have been paid out under the Jobs Support Scheme and the Wage Credit Scheme. The agencies are working hard to bring forward an additional $500 million of wage credits under the enhanced parameters from September to end June. Altogether, the Job Support Scheme and Wage Credit Scheme will flow $16.2 billion into the hands of businesses by October this year. To further ease cash flow for businesses in the immediate period, our grants an automatic deferment of income tax payments for companies and self-employed persons for 3 months. No application is required. For companies, we'll defer income tax payments due in April, May, and June 2020. Instead, income tax payments will only be payable from July 2020. In other words, if you made money last year and need to pay tax this year, you will delay paying for 3 months, so you can use the cash to meet other urgent needs. For self-employed persons, the payment cycle for personal income tax for the year of assessment 2020 generally starts in May 2020. We'll defer income tax payments due in May, June, and July 2020. So income tax payments will only start from August 2020. Employees may approach IRS if they need help with their income tax payments and wish to avail themselves of this arrangement. The second C is cost. Where the cost is within the government's control, we'll do our best to help. I will therefore enhance the property tax rebates, which I announced in the Unity Budget, by raising the amount and covering more types of properties, details in the annex. For 2020, qualifying commercial properties that have been more badly affected by the COVID-19 outbreak, including hotels, service apartments, tourist attractions, shops, and restaurants, will pay no property tax. This is a big enhancement from the 15% to 30% property tax rebates announced in the Unity Budget. Businesses in other non-residential properties, such as offices and industrial properties, are also affected by the COVID-19 situation. I'll now grant a property tax rebate of 30% for the year 2020. I strongly urge landlords to fully pass on the rebates to tenants by reducing renters to directly ease the cash flow and cost pressures faced by tenants. Many businesses have pointed out that it will be a lose-lose situation if landlords do not support their tenants. After all, if tenants fail, the properties will be empty. So my message to landlords is, do your part, chip in, and give additional help to tenants who are more badly hit. The government will lead by example in supporting tenants by enhancing rental waivers. NEA will give stallholders in hawker centres managed by the National Environment Agency or NEA-appointed operators 3 months of rental waiver, up from 1 month announced in the Unity Budget. Other government agencies like HDB and the National Arts Council will provide 2 months of rental waiver to eligible tenants, up from half a month announced in Unity Budget. Beneficiaries include social service agencies and charities. All other non-residential tenants will receive half a month of rental waiver. In addition, as mentioned earlier, I will freeze all government fees and charges by 1 year, from 1st April 2020 to 31st March 2021. The third C is credit. I will further enhance our financing schemes so that even the hardest hit businesses can continue to have access to credit. I earlier enhanced the Enterprise Financing Scheme, EFS, SME Working Capital Loan, to alleviate SMEs' cash flow concerns and introduce the Temporary Bridging Loan Program, or TBLP, for enterprises in the tourism sector. To support businesses' trade financing needs, I will enhance the EFS trade loan by increasing the maximum quantum from $5 million to $10 million and increasing the government's risk share from up to 70% to 80%. I also announced subsidies to businesses for loan insurance premiums under the loan insurance scheme from 50% to 80%. I will expand the temporary bridging loan program to all enterprises and increase the maximum supported loan from $1 million to $5 million. SMEs that require support beyond the TBLP can continue to tap on the EFS SME Working Capital Loan. The maximum loan quantum for this will be further enhanced from $600,000 to $1 million. In addition, we will work with participating financial institutions to defer capital payments for 1 year on the EFS Working Capital Loan and the TBLP loans, if requested by businesses, subject to assessments by participating financial institutions. Details are in the annex. In addition to these enhancements to our financing schemes, I will set aside $20 billion of loan capital in this budget. This will help to support good companies with strong capabilities and catalyze private sector loan capital. As the situation is fluid, we'll seek to provide help where credit needs are more acute. Concurrently, MAS is working with banks and insurers to see how best to help businesses and individuals facing cash flow challenges with their loan obligations and insurance premium payments. Details of these measures will be announced by MAS and the industry later.